Are you someone who has a mortgage, potentially low credit, looking to take advantage of lower interest rates and refinance, but you haven't been able to because maybe your credit score is too low, your debt to income ratio is maybe higher than what lenders want to see, or maybe you don't have the equity required in some cases in order to refinance and take advantage of lower rates? Well, today the FHFA, which is the Federal Housing Finance Agency, actually announced a program that you could benefit from if you're in this situation. So if you're someone, again, that has lower credit scores, maybe a higher DTI, or the loan to value isn't there, they announced a program called the Refi Now program, which is going to allow you to take advantage of lower interest rates. As many of you know, we've seen interest rates trend down, even, the mid 2% range at the lowest, but hovering somewhere around 3% for the last couple of months. And this is, a big step for a lot of those people out there that have mortgages, have higher rates, and have wanted to try to lower their payment and take advantage of this, but haven't been in that position. Maybe you've had a late on your credit report, and because of that late, you haven't been able to take advantage of lower rates. So I want to take a little bit of time and pull up the information from the FHFA, because there are, clearly there's stipulations that are required, certain requirements that you have to meet in order to qualify for this. But I think this is going to help a lot of people, especially lower income borrowers, take advantage of lower rates, which in turn could, save money, put you in a better financial position. My name is Jeb Smith. I'm a real estate broker here in Southern California. Again, not a mortgage broker, but as I mentioned in all my videos, if you need a mortgage professional, there's a link in the description below. Click that, and I'm happy to refer you to somebody that I know, like, trust, that will do a good job and take care of you. And if you have comments, questions for me, do me a favor, put those below as well. And if you're new to me, new to my channel, it's all about helping educate you on the real estate side of things, whether you're a buyer, seller, homeowner, and just guide you through that process. So do me a favor and hit that subscribe button and hit the like if you find this content useful. So let's take a minute and pull up that information. Now, this article is from Housing Wire. I'll put a link below so that you can pull up the entire article yourself, but I have taken a moment to highlight the information that I feel like is probably the most important and going to be the, address the questions that are going to be asked the most. So it says, under the new refi option, lenders must ensure that the borrower saves at least $50 a month in their mortgage payments while simultaneously dropping their interest rate by at least 50 basis points. So what does that mean? That means your interest rate has to go down at least 0.5%. And you have to save at least $50 a month in order to be eligible for this. So if you have a 3.5% rate and you can take advantage of a 3% rate and it saves you more than $50, then you could qualify for this loan. And you can use, your situation and examples and what have you to figure out whether or not you could qualify, or you could talk to a lender. Goes on to say the FHFA will also require that lenders provide a maximum $500 credit for an appraisal if the borrower is not eligible for an appraisal waiver. The GSEs will reimburse the lender once the loan is sold. So the last part's not important to you, but it does say that, the borrower will be essentially provided a free appraisal for the most part, up to a $500 credit to have an appraisal done if you don't get the appraisal waiver. So in some cases, you can get a waiver on the appraisal where one is not required. If you don't get that waiver, this is saying that lenders provide a maximum $500 credit for an appraisal if the borrower is not eligible for the waiver. So they should provide up to $500 for an appraisal in order for you to get the appraisal done to see where your equity is. As part of the Refi Now program, the FHFA will also waive its controversial adverse market refinance fee for borrowers with loan balances at or below $300,000. This was a 50 basis point hit to the fee, not to the rate, for any refinances. And this happened back in December. Because of all the refinancing going on, they implemented this adverse market fee. That is going to be waived in this case if your loan amount's under $300,000. If it's over $300,000, it sounds like it will still be there. Here's the key part. To qualify for this option, beyond owning a Fannie Mae, Freddie Mac mortgage, so this is not FHA, this is not VA. Keep that in mind. Fannie Mae, Freddie Mac. A borrower must have an income at or below 80% of the area's median income and have been current of their payments for the last 6 months with no more than one mortgage payment missed in the last 12. So you've had to been current for the last 6 months. You can't have more than one missed payment in the last 12 months. And your income has to be at or below 80% of the area's median income. So that's going to disqualify a lot of people out there. This is really meant to help those with lower income, lower credit scores qualify. Borrowers must also not have a mortgage with an LTV ratio greater than 97%. So if you have an LTV greater than 97%, you're not going to qualify. And a DTI no higher than 65%. So typically when refinancing Fannie Mae, Freddie Mac, they want to see your ratios somewhere around 45-ish%. Some cases it'll go as high as like 49%. This is allowing your debt to income ratio to go to 65%. So much higher in order to qualify for this loan. Lastly, borrowers must have a FICO score no lower than 620. So it's allowing you to take advantage of lower rates with a 620 credit score. Typically speaking, with Fannie Mae, Freddie Mac, you want to have at least a 680 in order to do, a conventional loan. A lot of times borrowers are going FHA if in this case. Now, it's hard to say exactly what the interest rates are going to be. It doesn't say at this point where they're going to be, but we'll talk about that in just a minute here. It says the FHFA said it plans to make this product available to eligible borrowers as soon as possible with a tentative date beginning this summer. So something to keep in mind, this is not available yet. I know a lot of people are going to reach out saying, how can I take advantage of this? At the moment, you can't. You can get ready to take advantage of it, which means that you need to continue to make your mortgage payments on time, continue to pay your bills on time so that your credit's not affected, continue to gather documents. There will be documents required. This isn't a loan that doesn't require any documentation. You're still going to have to provide income documentation. So W-2s, pay stubs, if you're self-employed, tax returns. It doesn't say anything about assets being required or what have you, but you might have to provide checking accounts, savings accounts, statements for the last couple of months just to show that you have some reserves in there. They're going to run a credit report. So, while you're waiting for this product to come available, start gathering those documents, keep those documents current so that when you talk to a lender, fill out a loan application, that's going to be required. You have the documentation ready to provide to them so that they can start the process and move through it. Now, keep in mind, there really shouldn't be any out-of-pocket fees initially, at least, because the appraisal should be taken care of based on what I read there. But there might be closing costs, right? There might be fees associated with refinancing your mortgage. So just make sure, as I've mentioned many, many times, you might want to compare, right? You might want to get more than one quote with a different lender just to make sure you're not getting taken advantage of. You're getting, the best interest rates out there. You're not getting charged exorbitant fees. You're not getting charged a lot of fees. How's that? In order to do the loan. So just, again, make sure that you're doing your homework and comparing interest rate, fees, etc. with brokers out there. Don't just call a call center. Don't just go online and find somebody that can do it without checking around, right? Make sure you're not getting taken advantage of. So, but as I've mentioned many, many times, if you have questions for me, you can comment below. You can reach out to me directly, but hit that referral link below if you want to get connected with a mortgage professional that can do this refinance for you when it becomes available. But for now, that's the information I have. Again, I'll leave the link below. But if you find this information helpful, do me a favor again and hit that like button. I appreciate you taking the time to watch. Appreciate the support. Hope to see you again soon. Have a great day. Bye-bye.